Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. At the first glance, the situation is the same as this was in the weekend, but in reality this has changed a bit. Particularly speaking, there are some really interesting moments and rumor stands around the gold market. I hope that you track our weekly researches and you're more or less in the topic that we have usually discuss on the gold market. The overall situation right now stands so that in the nearest couple of weeks, maybe till the end of the July, gold market hardly will show some significant action. Only if something unexpected will happen on the geopolitical tensions on the Iraq or Ukraine. But from the economic factors, hardly will happen something really tremendous, because there are three major, you could call it some issues that probably investors will expect to get. First is inflation data that will be released until the end of the July on the United States economy. Second, investors would like to see how positive that data on the general economy will impact on the earnings reports on the companies, because the July is the major month of the earnings report on US companies for the first quarter of the 2014. And finally, what is more significant is how Fed will react on the data that we have got and we will get on the July, how it will compound it and what reaction will follow. Because, for example, if data will be extremely positive on the economy, but Fed reaction will be limited, and Fed will not encourage investor on the rate hike and on a hawkish policy, in this case, even we could see even the fall of the United States dollar, weakness of the United States dollar, because investors will be disappointed by the Fed comments. And when you have the equation with the significant amount of variables, investors will not take the additional risk. They will try to eliminate some variables, and after that will take the bet on some direction. And this eliminating probably will happen only when at the July Fed meeting, right on the 30th of the July. So that's why in the current situation we do not expect really significant action on the gold market. Besides, there is really anemic demand on the physical market. The SPDR fund reports only for approximately 1.8 ton of the gold equivalent inflow in the fund. That's really very small compared to the first splash that we have seen on the previous week, when the inflow was approximately the 10 ton in the 2 days. That was really very significant inflow. And now you see that the first reaction, the first, if you could call it some emotional splash on the gold market now is fading out. And many physical traders reports on the weak demand when the market stands above the 30 even. So really significant decreasing of the spot demand. That's why I think that the chances of on the retracement to the 1295, 13 even area now looks as significant. And probably we will get our technical head and shoulders pattern here, and probably we could get this retracement. Also guys, if you have read our recent recent research of the Forex market, you probably remember that we have pointed on the stop grabber on the Swiss franc, and now you see that this stop grabber has failed. Yesterday it has failed. That's why this significantly reduced the chances on the possible upward action here, and we probably could be ready for completing of this double of this head and shoulders pattern on the intraday charts and possible action right to this area. Another reason, pure technical reason why market could show this retracement, because we have the July pivot point and hasn't been tested yet. You know that market tries to test the pivot point at least once during the period, and this is July pivot point and market hasn't tested it. That will work as some sort of the magnet for the gold market, and probably market really could show the retracement right to this area. I just do not want to talk about the other reasons. Recall that here we have also disrespected significant resistance area that market has passed through without any respect, and many in the odds suggest that market in most cases returns right back down, retest this area from the opposite side before to take any other following action. That's why this area is very significant. Maybe we could even talk about 1290, 13 even. Based on the 4-hour time frame chart in the very short-term perspective, we have different possibilities. Recall that market has hit the 1618 extension target of this ABCD pattern that we have discussed previously, right at the fib resistance, so that's very significant resistance there. That's resistance agreement on the daily chart, and return right back down on the previous consolidation. It means that market should reach at minimum the lower border of this consolidation. From that standpoint, I see, guys, that here we could get the butterfly buy pattern, and that stands in agreement with the shape of the head and shoulders, so market could reach the neckline and after that turn to forming of the right shoulder, because here you can see that the left shoulder is rather extended in time. It's really choppy, and some sort of this action we could see here, while market will wait for the Federal Reserve reaction on the data, while market will wait the earnings report for the companies, and so on. So here I see the chance on appearing of the butterfly here in the nearest trading sessions. Another pattern that we could get is the alternative to the butterfly. This could be the 222 buy. So market probably will not form the butterfly, but just ABCD down is 222 buy pattern to the upside. It's also possible. The one reason why I still think that we will get the butterfly is because that the completion point of this ABCD down stands at the edge of this low, and taking into consideration the habits on the gold market, they would probably try to clear out the stops that have been placed here below these lows and trying to move slightly lower. That's why I think that the butterfly is a bit more probable in the current scenario. So that's the only pattern that I see right now on the gold market, and this really calling inside of this range. And appearing of this pattern right now stands in agreement with the hand shoulders as when the normal market mechanics, when it returns right back inside of this consolidation, of the failure breakout of this consolidation. That's reasonable when we anticipate the move in the opposite direction, right to the opposite border. The opposite border of this rectangle hasn't been reached yet, and probably we should keep an eye on this possible development in the nearest future.